If you are still trading without understanding candlesticks, you're basically blind in the market, and that's why you keep losing without knowing why. See, every candlestick in the market has a cue. It exposes who is the buyer, who is in control. Either the buyers are in control or the sellers are in control. Some candlesticks even tell you when to get in and when to get out. In this video, I will explain to you how to read candlesticks the right way so that by the end of this video, you can go home knowing how to read the candlesticks the proper way so that you can start seeing the things you do not see in the market. Instead of trading blindly, you can now start trading more professionally. So let's get cracking with the video. So we're going to start with the normal candlesticks. I'm going to show you how the open candlesticks, how the lows, the highs are in understanding the candlesticks, either the wicks, the body, and everything in between. Then we are going to move into the bullish patterns, the single bullish patterns, the double candlesticks patterns. We are going to move into all of these, even the neutral patterns. So let's get cracking. For the single candlesticks, I'm going to do a quick example here on what this means. So in this particular area, you can see that it says we have the wick below, we have the body, we have the high, we have the close, we have the open. For a bearish candlestick, we have the high, we have the close, we have the open, we have the low, we have the open, and we have the body. It's the same thing everywhere in the market. So let's go to the charts. So we show you. Right here, we have the high of this candle right here. We have the open of this candle right here. We have the low of this candle right here. And we have the close of this candle right here. So remember, when it's bearish, the high of the candle is at the top, the open is right here, the close of the candle is beneath, the low of the candle is here. When it's bullish, we have the high, we have the low of the candle here, we have the open of the candle right here. Let's expand this so you see properly. So we have the close of the candle here. You can see this wick is very, very little, but that's the high of the candle. So the wick of the candle represents the high of the candle. So I have a quick diagram here. So I'm going to draw, I'm going to do this is this is going to be bullish and this is going to be bearish. So we can get really, really into the business of explaining this to you. So this is going to represent the wicks. Let's clone this. This is going to represent another wick here. This video is going to be really detailed, so you need to pay attention and pause to take the information rightly. There's no need to rush. The video is going to be on the internet forever. So this is going to represent the bearish candle. Let's find this. Come on. This is going to represent bearish. And this is going to represent the bullish. So what do we have here? Like I explained earlier, this is for a bearish candle. This is the bullish candle. This is going to be the high. The high is going to be the wick here. This is going to be the low of the candlestick right here. This is going to be the open. So as price opened here, it came down a bit, then pushed all the way here, and this is going to be the closing price of this candlestick. Do you get it now? So this is going to be the low. This is going to be the open. This is going to be the high. Let me just give me a second. So let's do this low. This is going to be the low of the candle. This is going to be the open. This is going to be the high. And this is going to be the close. Now this is for bullish. This is good. It doesn't change. This is it. So this is the low, this is the open, this is the close, and this is the high. The reverse is the case for the bearish candle. So for the bearish candle, we have this as the low of the candle. Pardon me, this is going to be the low of the candle here. This close. This is going to be the open of the candle here. For the bullish, this is the open, this is the close. So let me copy this. Nice space. So this is going to be the high. And this is going to be the close. So close, open. Let's put it here. This is going to be the open. This is going to be the high. And this is going to be the low. 1 second. This is going to be the low. So I'm going to expand this so you can take screenshots to understand it. This is it. This is it, my friends. This is how the candlesticks operate. For the bearish, the low is in the bottom. This is the low of the candle for the bullish. This is the close of the candle for the bearish. This is the close of the candle for the bullish. This is the open of the candle for the bullish. This is the open of the candle for the bearish. And these are the highs. Stephanie. So once you understand this, it gives you a basis of understanding the other concepts of the market. So let's get cracking with the other concept of the market. Like I said, I'm going to teach you the single pattern candles. I'm going to teach you the double pattern candles. So now let's start with the single pattern candles. So in the single pattern candles, we have multiple candles. We have, let's increase this to 16. We have the doji. We have the dojis. We have the engulfing candle. And what I'm going to do in this video is going to make sure that I give you what you need, what I use, and what you need. You don't need every other candlesticks. So we have the hammer formation. We have the hammer. What do we have again? Let's see. The single candle, we have the doji, we have the dojis, we have the hammer, we have the engulfing candle, and I think that's about it. Dojis, hammer, engulfing candle. So these are going to be the single. So let's start this. It's a single patterns. So why are there single patterns? Is because this just presents itself just in one way in the market. Like we have the dojis this way, so we have, let's do it this way, and we have it this way. So the doji, sometimes it has a bit of a body. Okay, let me not use this. Let me use, yes, I think this should work. So what the doji just means, the dojis means indecision. Take your pen and paper and make sure you're writing. The dojis means indecision. When we say indecision, as price, remember the open, high, and close. So price probably, let's say in a bullish market, let's just imagine this market is bullish this way, this way. So, and you find a doji right around here. So remember, price will definitely open from the low, went all the way to the high, and finally we have the candle in the middle. The candle just means the buyers and the sellers, after all the rambling, decided that the middle price or here is the best thing or the best price they can give it. So nobody is accepting to buy this particular market on this particular candlestick above here, and nobody's willing to sell it below here. So it ends in the middle. That makes it a single pattern candlestick. And dojis are very important in the market, but you can see dojis everywhere. So it's very important when it is in a critical point, like an area of interest. So that's what makes it an important candlestick. So I'm going to leave all of this here because I'm going to be taking information from all of it. So now the engulfing candlestick, and the engulfing candlestick is just one ginormous candlestick that prints either bullish. So I'm going to use green as bullish. Then I'm going to use red as bearish. So this is an engulfing candlestick. It's just a one candlestick that just prints all the way above the candlestick next to it. So why is it called an engulfing stick? Let's say we have a little candlestick right around here. Bear with me. So let's say we have a little candlestick right around here. You can see how this candlestick here, this one, totally engulfed this other candle by the side. That's why it is called an engulfing candlestick. So for the bearish side, you can have it the same way. So this particular candle here totally engulfed this candle. So it is called an engulfing candlestick. So why did he, when you see this, what cue is it giving you? What cue is the market telling you? It's telling you that the sellers are in charge here. So let's write that down. So we have, when you see a bearish engulfing, the sellers are in charge of that particular area at that moment. So the momentum is there for the sellers. So when you see a bullish candlestick, you have buyers in charge. So remember, engulfing candlestick, bullish engulfing candlestick, buyers are in charge. Bearish engulfing candlestick, sellers are in charge. C'est fini. Then we have the hammer candlestick. So what makes a hammer candlestick? Why do we have a hammer candlestick? So I'm going to draw out a hammer candlestick right here. Let's do this first. So let's have the candle. Come on now. So let's have it. Let's say this is a candle. This is the wick of the candle. Then we have the close. The candle is just opened and closed here. Come on. Okay, let's expand it. So let's say this particular candlestick, let's say in the real-time market, price opened in the bottom here, price opened here. Then as price opened here, we have the buyers push the market all the way to this point. But by the close of this candlestick, this is where the candle closed. So that basically means that the buyers didn't have enough control, so the sellers were able to take charge of the market and push the market all the way down. So this is the selling hammer. So when you see a bearish hammer, the sellers are in charge. When you see a bullish hammer, so we have the market this way. Clone this and bring this here. So imagine the market opening from here in a seller's market. Oh, sorry, imagine the market opening here in the buyer's market. Markets open here in the buyer's market, push all the way. Sellers try to push it back, but at the end of the day, it closed this way. Now, imagine you have that kind of candle, and now we are getting deep now, so you need to pay attention. Imagine you have that kind of candle, and you have an engulfing candle right by the side. What is it telling you? What cue is it telling you? the buyers are in control. So we have a hammer candlestick, we have the engulfing candlestick, the buyers are in control. So now let's do that for the sellers market. So we have the selling candlestick, and we have this, sellers are in control. This is the sellers market. The sellers push the market all the way, closed a hammer candlestick. Then we have the engulfing right after the hammer candlestick. This is the cue. The market is telling you something. So pay attention and follow through. So this is, now we're already getting deep into like the double candlestick formation. So these are the major ones. So we have the hammer candlestick, we have the engulfing candlestick, and we have the dojis. So you can take your time, screenshot this so that you can have it in your notes. So now let's come to the double candlestick pattern. We have spoken about the engulfing candlestick. We have talking about we have not spoken about tweezer tops and tweezer bottom. So what does a tweezer top and a tweezer bottom mean? So call it tweezer top and tweezer bottom. So we have a tweezer top and a tweezer bottom. So let's increase this. What does it mean? I'm going to first of all illustrate what it means. First off, if we have price going this way in a bullish market, you have price going this way, come back down, create a double bottom, go all the way up, come back. Me and you can agree that this, if you see this, even a 5-year-old child, when he sees this, he knows this is a bullish pattern. So now come the tweezer top. So tweezer top really means at the end of the trend, when we got to the peak of the trend, let's say we got to this peak of the trend, the candlestick just represents that nobody is ready to buy it above there, so the sellers will take charge. Nobody is willing to buy it above this price line here, above this price point here, so sellers take charge. So what candlestick depicts that? So it's an even candlestick. So we have let's do this. Come on now, move. Okay, so remember we are bullish, so price is going this way. These things can be very tricky sometimes. So basically what I'm trying to depict is the wicks. So let's say the wicks here, and this is the wick here for the sellers. So at the end of this trend, when we got to the top of this trend, the buyers decided to stop here and nobody was ready to buy above here. The sellers came into the market. So the candle is depicted by two even candlesticks that almost have the same measurements. That's the tweezer top. So for the tweezer bottom, we're selling, we got here and the market stopped here. Come on now, don't beat this. Let's do it again. Market is selling this way. Price happens to do this. Then we have this situation here. We have this situation. Clone. We have this situation here. So remember, this is a bearish market. So let's make this red. So price was selling, and boom, when we have a tweezer bottom here. So tweezer bottoms and tweezer top basically shows you the trend is about to end. But these things need to happen in a good area of interest. Maybe a resistance level on the higher time frame, the support level on the higher time frame. So when price got to all of this area, you can see just print a tweezer top or a tweezer bottom in those areas. So when things like that happen, all you need to do, the market is giving you a cue that direction is about to change. So you take action with that information. So we've done the tweezer top and the tweezer bottom. Now let's start doing the main candlestick formations, like the double candlestick formations. So these are some of my go-to candlestick formation. So these are like we call them the morning star, the evening star. So the morning star is basically when price is bearish. When price is bearish, we have a bearish price. And price decides to stop here. When price is about to change direction, it prints a morning star. So a morning star is a 3 candle formation. So we have that. We have let's get the doji. A little bit of this. We have this, and then we have this. Spread green. We're getting deep now, so pay attention. So this is the typical morning star formation. See, we have a trend coming down, and boom, a normal candlestick, a doji. Let me highlight them so you know this is a doji. We have this, we have the doji, then we have the engulfing candle with it. We have the engulfing candle, and this is just a normal candle. So the evening star formation, sorry, the morning star formation. Morning star formation combines combines 3 candles together: a normal candle, a doji, and an engulfing candle. So when you see all these 3 things together in an area of interest, your cue is to buy. So if I see this kind of thing in, let's say, a weekly support area or a daily support area, I'll just buy, set my stop loss below the engulfing candle, and expect price to push up. So now this is a cue. That is a cue. The cue market is trying to tell you something. So you pay attention to what the market is trying to tell you. So now let's do it for the bullish. Bring this here. So price is going up, making higher highs as it's going up. Then as soon as we got to, let's say, resistance level, let's create a resistance level here. Price got into this stop, came back, now got back here. As it's about to transcend into a different trend, do you see the candlestick that it prints? So let's clone this. Let's push this here. Now let's clone this. Let's bring this here. Let's take this out so we have. Let's clone this. Bring this here. We clone this and bring this here. So remember, doji, this is a doji, this is a normal candlestick, and this is an engulfing candlestick. That's what make the evening star. So clone this and bring this here. This is called the evening star formation. So this happens in an uptrend, this happens in a downtrend. So as price is about to change its formation, trying to change direction, it prints this. So it gives you a cue to set. Let's do this red. So let's make this green. So as price is about to change direction, it does this, the evening star formation and the morning star formation. So all you need to do, these are cues in the market, all you need to do is find areas to sell right above the engulfing, and boom, let's price do its thing. So these are the candlesticks. So you see, from all I've been able to speak about, you can see that all of these candles, all of this thing here depicts information the market is passing to you. Now imagine trading blind and you don't. Imagine I'm blindfolded and I'm trying to run, or I'm trying to drive a car. I'm going to crash. So you're losing money because you are blindfolded. You don't understand how to see these things for what they are. So this is a lot of information here. So you need to take your time to draft them down and get the information. So let's go on. Let's find some other. So we have done the morning star, we have done the evening star. So what other candlestick that's very, very important that we need? I think that's about it. These are the major candlesticks you really need. So we have done the theoretical part. Now let's get practical in the real life markets. So now this is GBP USD. Let's clear all of this. Now this is GBP USD. We go to the weekly time frame. Remember, how I trade and how you should trade is the higher time frame give you clarity of what you need to do next. Then you go on to the smaller time frames to be able to start picking out your trade. But this is not a video for analysis or anything. This is just a candlestick video. So when we go on the line chart, let's do a quick markup. So we can see around here that there's a resistance zone around here. One touch, so this is a bit shy, and another touch here. So that's 3 touches around here. Then let's find another. This is a support level here. So we have 2 touch. This is a bit shy, another touch, then another touch here. Let's just focus. Okay, let's do one more, so we can just dial in and focus on what we need to do. So this is another resistance level around here. So what I'm trying to do now is to show you how all of these things you have learned here, all of these patterns you have learned here applies in the real life markets. So this is how the market shows you cues on what to do. So if we come here now, remember this is the markup. So on the weekly charts, let's go daily first. On the daily chart, on the daily and weekly charts, we have been able to mark up our areas. This is called an area of interest. So we've been able to mark up the areas of interest right around here. Now let's find candlesticks that tells us what to do or gives us cue in the markets. So now just right around here, we can see this as the evening star formation. Where's the evening star formation we drew here? The evening star formation we drew here is basically what is applicable around here in the markets. See, first off, we have the normal candlestick, which is this. We have the normal candlestick, which is this. We have the doji. Dojis are of different variations. So we have a doji here. What shows you that this is a doji? We have the highs, we have the low, we have the body in between the highs and the low. But you can see this normal candlestick, you can see that it's almost filled up. This is a doji, this is a doji, this is a doji. So now we have, this is like a hammer formation. This is a hammer formation, this candlestick here. This is a hammer formation. This is a hammer formation here. So, and it's also engulfed all of these 3 candles. So this is what we classify as an evening star. And boom, immediately this happened. You can see how if you sell, put your stop loss maybe above the wick or maybe above this normal wicks here, you can see how the market has gone all the way down. This is another example of an area where price created an evening star. See, remember this 3 candle formation, the normal candle, we have the doji here, then we have either an engulfing candle or maybe 2 candles that follows each other, 1, 2, and boom, the market is all the way to the bottom. If you wait till the 6 o'clock candle to sell, like this candle that has engulfed, you're still going to have like a ginormous trade. So that's how it works. So this is a practical thing. So all you need to do now is go home and test extensively. So if we look at here for the morning star formation, remember all this formation, all these candlestick patterns need to play in a good area of interest on the daily or the weekly or the FAR so that they can be critical, because you can't just pick and choose all of these formations in the middle of the park. You get stopped out unnecessarily. So now look at this particular formation here and look at this formation here. This is the morning star. So if you go back to what we did here on the morning star, the doji, remember the normal candlestick, the doji, and the engulfing. So if you come here, remember, see, normal candlestick, doji. We didn't have an engulfing candle, but we have like a three candle following each other type of situation. I think we have it here. We have like maybe called the hanging man or the shooting star. See, normal candle, the hammer, 3 candles following each other. Normal candle, hammer, 3 candles following each other. So situations like that, but I classify them as evening star. So all I need to do now is just find areas to buy around here. Stop loss right below the park, and you get a 1 to 2. So that's the situation. So let's find a tweezer top. I think I've seen a tweezer top. Okay, yeah, we've seen a tweezer top. See, the markets, the candlestick really provides cues on what you need to do. Without understanding this candlestick, is basically like you're trading blind, like I said earlier. So look at this formation, evening star formation here. Normal candlestick, doji, and engulfing candle. Boom. Now look at the tweezer top here. Price was trending, going, doing its thing, doing its thing. As soon as it got here, you can see, if I zoom this out properly, you can see these particular candles, just these 2 candles here. Pay attention to just these 2 candles. So I'm going to change it to red so you can see. Pay attention to these 2 candles. You can see they're almost of equal lengths. This particular low here, the wick here, almost of equal length to the highs of this particular wick. Then this body almost the same length as the body of the next candle by its side. And boom, you can see, you set your stop loss right above it. You can see how price gushed all the way down. So these are the things you need to, with practice, you can see all of these things. How I'm able to see all of this is because I've been here a long time. So with enough practice, you'll be able to see. You can see this is an evening star formation. They're everywhere, but make sure you take them in areas of interest, not just randomly. Make sure they are taken in areas of interest. So I think that's about it for candlesticks. Let's do a quick recap. So what we have been able to talk about, give me this box, then heighten the candle for me, give me green. So what we've been able to talk about, we've been able to discuss the dojis. We've been able to discuss the dojis. We've been able to, there's one. We're going to discuss the engulfing candle. We've been able to discuss open, high, and close. We've been able to talk about the evening star and morning star. We've been able to talk about the tweezers, tweezer tops, and bottom. So dojis, we also spoke about hammers, 6, hammer formation. So we have spoken about the dojis, engulfing candlestick, open, high, and close of every candle. We also spoke about the evening star, morning star formation. We also spoke about the tweezer tops and bottom and the hammers. So if you put all of these things together, these are the most critical. Remember I said I'm going to give you what you need. You don't need to stuff yourself up with unnecessary information. So these are the main things you need: open eye and close, single pattern dojis, engulfing hammers. We have the engulfing candlesticks here. We have the sellers engulfing, buyers engulfing. We have the morning star, evening star. We have the tweezers. That's all you need. So just go look for all of these candlesticks in areas of interest in the market, and you see how you're able to see markets clearly now. You're able to see cues when decisions are about to be made. You're able to be participant of those decisions. So don't forget to comment what you need, what stage you are in this particular trading space, what you need to help your trading career. Just comment it in the comment section. I'm literally here to be able to help you as much as I can, because I wish I was able to get this amount of help when I started my journey, but I didn't get it. So I was able to just piece things together. So with that being said, don't forget to like, comment, share, and subscribe to the channel so that we can build a big community of people learning and growing together. I'll see you guys in the next video. Bye for now.